Hello, and welcome to Everything Finance, where I help business owners get funding, startup business owners get funding, and also offer credit repair service to help not only business owners but regular people as well. So, today's video, I'm going to talk about how are credit unions better than banks? Well, credit unions typically offer lower loan rates but have fewer branches at ATMs, which is correct. But credit unions are non-profit financial institutions that require membership, while banks are for profit and do not require membership. Banks provide more access to branches and ATMs, but suffer when it comes to customer service. Credit unions offer better deals on rates and fees, but lack accessibility compared to banks. Now, credit unions and banks offer many of the same types of financial products and services, but there are some key differences between the two, from ownership, structure, to membership requirements. There are a lot of differences between banks and credit unions that are essential to know before choosing where to put your money. You may find a stronger connection to the community with a credit union, but you may find more convenience and accessibility with a bank. Credit union pros and cons. The pros of credit unions include better interest rates than banks, while the cons include fewer branches at ATMs. Pros: higher savings rate. Credit unions tend to offer higher interest rates for savings accounts than banks. Lower loan rates. Credit unions typically charge lower interest rates for loans than banks. Lower fees. Fees at credit unions frequently are lower than the banks. Credit unions are able to return profits to their members in form of lower interest rates and fees. Aside from generally more attractive interest rates and lower fees, credit unions provide more personalized customer service than banks do. This level of trust and its value sets credit unions apart. Members' trust has been partially built through credit unions' history of providing a high level of personalized and customized service. Cons: membership requirements. Goldstein notes that some customers might be put off by credit unions' membership requirements, such as working for a certain employer, belonging to a specific group, or living in a certain area. Fewer branches, because they zero in on relatively small service areas. Credit unions generally operate fewer branches than banks. However, credit unions stress that they generally belong to a large network of shell branches. Fewer ATMs. Credit unions may offer access to fewer ATMs than banks, but credit unions point out that they generally provide access nationwide ATM networks that are often fee-free. In 2024 of the American Customer Satisfaction Index, the number and location of branches at ATM were the lowest rated aspects of credit unions. As for the membership requirement, it might be one more hurdle for borrowers to seek loans from credit unions. Credit unions can lend money only to their members. Credit unions organizations and other credit unions. Credit unions were originally formed to serve a specific community or group, and while most have broadened their mandates to serve the general public, many still maintain lending specialties that focus on loans to those groups. Other than any shortcomings tied to membership branches and ATMs, credit unions might trail banks when it comes to technology like mobile apps. While credit unions may not be bleeding edge when it comes to innovation, they can and should be on the leading edge. Banks, pros and cons. Banks generally hold an average over credit unions when it comes to branches, ATMs, and technology. So, pros: more branches for customers seeking in-person service. Banks provide access to more branches than credit unions. More ATMs. In the American Consumer Satisfaction Index, banks earn a slightly higher score for the number of location of ATMs than credit unions. Potentially better technology. The average bank holds far more assets than the average credit union. As a result, banks wield a monetary edge when it comes to upgrading technology. In general, banks give you more access than credit unions. Banks tend to offer better options for online banking between national banks creating their own apps and newer online banking specializing in digital finance. Banks have the edge when it comes to accessibility. Banks' mobile technology, state of the art. If you expect to do most of your banking at a physical branch, brick and mortar bank might be a better option for you. Cons: lower savings rate. Banks generally are less competitive than credit unions in terms of interest rates for savings accounts. For instance, as of September 27, 2024, the national average rate for a one-year certificate of deposit with $10,000 stood at 3.26%. For credit unions, it was 2.41%. Higher loan rates. Interest rates for loans from banks tend to be higher than interest rates charged by credit unions. For example, as of September 27, 2024, the national average rate for a 60-month new car loan was 6.27%. At credit unions, it was at 7.50%. At banks, same source as above, lower in the table. Customer satisfaction. A study released in December 2022 by market research company J.D. Power showed a steady decrease in satisfaction amongst customers of the country's biggest banks. Credit unions also have seen a drop-off in their customer satisfaction though. Overall, Americans hold a dim view of banks. A 2024 Gallup poll found only 27% of Americans expressed a positive opinion about the banking industry, essentially the same as the 26% survey of the previous year. In March 2023, the same month that two U.S. banks failed, CBS News and YouGov released survey results indicating that just 11% of Americans voice confidence in U.S. banks. So, are banks or credit unions safer? Generally, credit unions are viewed as safer than banks, although deposits at both types of financial institutions are usually insured at the same dollar amounts. The FDIC insures deposits at most banks, and the NCUA insured deposits at most credit unions. 7 banks have failed in 2023 and 2024, and all were insured. Likewise, 7 U.S. credit unions have failed, merged, or gone into conservatorship during the past 2 years, and all were insured. Beyond the insurance issue, credit unions are considered safer than banks because they tend to take fewer risks and adhere to conservative investment principles. In part, that's because credit unions are nonprofit whose owners are their members, whereas banks are for-profit entities whose owners are investors. Now, where should you go? Banks or credit unions? Which are better? Well, in my personal opinion, if you want to deal with getting loans and taking out loans and stuff like that, I will say credit unions are best for that, because also they will offer you loans a little bit faster than banks would. So I would say personally credit unions, you know. But if you are a person that travels and you go from state to state and stuff like that, and you just want a little more accessibility, like like the banks, the big banks, I should say, then probably big banks will probably be your best bet, just for accessibility reasons. That's what I would say, as far as that, because like I said, most credit unions are in small neighborhoods, and it's usually local to that city, you know what I'm saying, or that specific area. So that's my take on it. Make sure you guys like, share, and subscribe. Don't forget to hit the link in the description in the video. And I will see you guys next time. Take care. Peace.